So the final panel, our topic is Bitcoin mining and tokenization. And we're very lucky to have a wide range of panelists from the industry here today. Maybe we can start quickly with introductions. Bjorn, do you want to start?
Hey, I'm Bjorn, the founder and CEO of Penguin Infrastructure, where we're running 100 megawatts of data center capacity in Paraguay, mostly focused on, or almost entirely focused on Bitcoin mining. And Penguin Academy, where we are running students through a 8-month program, getting them from zero into tech jobs.
I'm Guy Stangane from Tether. I'm VP of Energy and Mining at Tether, managing our energy infrastructure investments and Bitcoin mining activities.
Hello, everybody. I'm James Macedonia. I'm the Chief Growth Officer of Blockstream Mining. We're primarily a mining operation, but we also create financial products. And with the help of Bitfinex, we're going to get them listed on the secondary market. You may have all heard of the BMN1, and now we have the BMN2 live.
Thanks, everybody. My name's Ian Northen. I'm a co-founder at Ocean, which is a Bitcoin-only mining pool. Our focus is primarily decentralization, and I'm probably the least technical person on the team. I'm a lawyer by training, but it's a great joy for me to be here at the conference. And thank you again to Jesse and Bitfinex for their hospitality and all the good folks surrounding this, and Plan B next door, which starts tomorrow. So thank you so much.
I think we're fairly competitive on being the least technical person. Bjorn, so we've got a good mix here today of people involved in the Bitcoin mining industry from different regions and jurisdictions. So seeing as we're in El Salvador, can you kind of update us on the state of Bitcoin mining in the region? Where are kind of the big hotspots? How much of global hash rate is kind of coming out of the region at the moment?
So hash rate today is, let's say, more or less at 800 exahash, right? And I think in Latin America, Central America, it's not a lot, to be honest. It's probably like 15 to 20 exahash, I would say. So that puts us at less than 3% essentially. I think there's some notionable countries. I think Paraguay is probably the main country. So ourselves and two more big players in Paraguay together are accounting for 300 megawatts. To give you an idea, that is a very large amount for this country. It's on an average day, 20% of the consumption of the country in terms of energy. And then I think we have a few ones that are also noteworthy. Brazil, Argentina, I think those are Venezuela. I think you hear now and there, but I think it's far behind Paraguay. I think that we talk probably about 50 to 100 megawatts each. And probably less hash rate with like older hardware rather. And then there are some, I think, great opportunities. A few times we hear about Ecuador, we hear about Peru that in theory have a bunch of excess energy. I think Chile is a very interesting country. You hear a lot of energy companies exiting Chile because the market is so competitive. But actually, when you look at it in deeper, you say that you find the market is very competitive. So far, there's no Bitcoin miners able to arbitrage or to come in and support these energy companies. And I think that's pretty much it in terms of the big size.
So I think the obvious question is, why isn't there more hash rate coming from the region? What are the big challenges that you've seen in the region?
I think the region is very particular in the way of doing business. I think it's a very complicated region to navigate. We've had some experiences in Paraguay. To give you an example, if you would connect in Paraguay to the power as a 6 megawatt project 3-4 years ago, you would get 3 cent energy, right? Today, these people, they pay more than 6. So that was a shock. In our case, we're a bit more lucky. We invested heavily in infrastructure. We built out the electrical grid, and therefore our price hike was much less, but it was still noteworthy. And I think that this is the experience that other people also have, right? I think this makes it very difficult to navigate. It makes it very artisanal. It's not like one market where one country works like the other. It's a huge difference between Paraguay, Argentina, and Brazil to each other. And then you have difficulties like import, right? You have it's very complicated. Certain jurisdictions to import. There's not a lot of I would say stability in terms of the institutions, in terms of that you know what price you're going to import for. And then finally, I also think that, as I think earlier mentioned, the correspondence banking plays an important role. Some players made very bad experiences where they couldn't pay for electricity. Very large players that were very upset about not being able to send money to themselves. And I think also the countries themselves, they haven't really tapped into Bitcoin. They haven't really tapped into all of the digital assets industry and the movement. And so there's also, I think, a lot of misunderstanding still happening. I had a conversation with a very senior central banker a while ago, and he was very surprised when I told him there's only 21 million Bitcoin. He was like, tell me more about this. This sounds very interesting. So these things, it's still very far behind in terms of the perception of what this industry is, and it's not perceived very well.
Guy, I think Tether Mining has operations in the region. What do you see as the challenges and the opportunities for Bitcoin mining in the region?
Yeah, so at Tether, we are fortunate enough to be able to look at the whole world, which is really good. So we are actually actively scouting in 4 corners of the globe to see where the opportunities lay. And according to our experience, actually, we are very, very bullish on South America. And the reason for that is that it is very energy rich overall. At the same time, a lot of the countries have a very well-developed electricity market with private players. Not all of the countries, but the big ones like Brazil, Argentina. These are huge markets with very competitive energy players. And if you compare that to another very, very promising region, which is Africa, that has also large amounts of energy, stranded energy as well, it makes it much easier because you're dealing directly with private players compared to having to deal with governments as in the African continent. So that brings up a couple of opportunities, especially if you look for security and long-term investments. That's why we are now looking at doing investments in different parts of the continent, and you can enter as a private player. You can do investments in energy infrastructure. You can have a grid that is in most of the places stable enough to be able to also allow you to do arbitrage with your energy. Because at Bitcoin, at Tether, as you may know, we don't only do Bitcoin mining as a pure consumer. We also do large investments in energy generation. And for that, you need a grid that is developed enough, that is stable enough, and you need an energy market that is liquid enough so that you can trade your energy according to your needs. And you need other private players that you can trade with. So in that sense, actually, a lot of South American countries are very promising. And then, of course, we have the case of El Salvador, which is something else. We're going to talk about that at the panel. It's different, but it's very, very promising as well.
Oh, that's interesting. I wasn't planning on asking questions about that, but now I want to. So my understanding is that electricity in El Salvador is expensive, and the original idea behind the volcano token was to use geothermal, which is capital intensive. It requires a lot of capital up front. So what is it about El Salvador that's attractive?
So one of the main important points of El Salvador is that it has a very strong transmission grid across the country to the neighboring countries, and it has energy sources in different types: solar, wind, hydro, which is largely exploited, and then you have geothermal as well. That is where you have a huge capacity, of course. Now, I'm not going to get into the discussion of the volcano bond because it's a bit more complicated than that. But if you look at it from a private perspective, I think you ideally what you want to have is to have private players doing the investments. I think that's the healthiest way of developing a market generally, especially also in the energy sense. And therefore, we are having now private players coming in and investing in geothermal because the electricity prices are generally high. At the same time, since you have a very good transmission grid, a very interesting play that you can do in El Salvador, is to be able to have generation in different corners and have the consumption in different places, and then use the spot markets to basically do the trade. And again, if you have generation, then you don't really care about price because you're buying and selling. So it's more about having a liquidity of buying and selling and having the transmission grid that is not congested, so it's not curtailed.
James, blockstream mining is, I think, historically exclusively focused in North America. So what do you see as the benefits of being in North America, and have you looked at other regions? What are the challenges that you see?
Yeah, no, we did. I've been a blockstream for about 3.5 years. And when I first came on, we did look at Paraguay. And, I just thought it was too much risk to make a large investment down there. It was a little uncertain with the government, which way that could go. And it was uncertain with the energy prices, where the government owns the energy. And, you really couldn't, I don't think it would be resold. So you had to have you have to put it on, tack on to hosting. So all in, and plus you have to find a partner down there because we don't have an operation down there. You have to hire people and so on. So all in, if you tack that on to the total costs, it's cheaper to do it in Texas. All right. But we did look at, Australia, a lot of wind and solar there, and East Africa. And we looked at that as well. But we keep coming back to, we're getting energy as low as, 3 cents, with about a 5% curtailment in Texas. And we have local resources, full consolidated operational, and it financially just doesn't make sense for us to go outside of U.S. right now.
Maybe a question to all the panelists is, a couple cycles ago, we were concerned that Bitcoin mining was centralized in China. Now it looks like a lot of hash rate is in the U.S. How big of a problem is this, and how do you see that evolving over time? Will it naturally move out of the U.S., or is it, as James said, Texas is a very attractive jurisdiction, and capital is, the U.S. is the number one place for capital. Is that going to mean that Bitcoin mining stays in the U.S. for kind of a longer term period?
If I could, I would jump in and say that our focus as a pool was to focus on decentralization, and there's all kinds of types of centralization risks. But for us on the pool side, when we launched about not even 18 months ago, all of the world's Bitcoin, newly minted Bitcoin, was going to 3 addresses, the 3 largest pools, and the next, half a dozen or more pools were all proxies for another pool, these FPPS pools, these custodial pools. So we launched with a focus on with decentralization in mind, with non-custodial, permissionlessness, and full transparency. So for us, for example, just since we've launched, hundreds of our miners have been able to take payouts directly from the Bitcoin network. And by not stepping in the middle and taking custody, there's no additional transaction fees. It's a feature of the Bitcoin network. If it's paid out directly, there's no fee, right? So that's something that if the Bitcoin miners themselves, wherever they are around the world, are doing things the right way by running their own nodes, participating in decentralized networks, the risk goes down. But a collusive government, the United States, it seems to be warming, now that a new administration is in. But the U.S. cannot shut down 20 or 40,000 nodes around the world, or these miners in all these places if they're doing those basic parts, right? But it could shut down a couple of addresses. In the same way, China couldn't do it. Or even the U.S. and China together, right, could not do it. But by doing those parts of running a node, creating your own block templates, we think those are good efforts to decentralize mining. So regardless of where it is, whether it's on grid, off grid, stranded, we're finding our customers are coming from all parts of the world. We have some in South America, Central America, the U.S. We're trying to work with customers in more difficult jurisdictions like Canada or others that have some interesting rules that make it difficult for them. And so by working through that, we're still small. We didn't solve the problem overnight, but we're trying. I think we're right around about 0.5% of the global network is mining on Ocean. But I think in time, as more and more people realize that centralization is a risk, that we'll get better adoption, and I think that'll be good for the industry at large, right? And I think you're going to continue to see innovation in the space, and people be very opportunistic. We talk about Texas. I've got cousins down in Houston, oil and gas country. But most of the mining went west. All these failed new Green Deal energies propped up by bad government subsidies and bad ideas. The transmission was too expensive to get it to the population centers of Houston and San Antonio. So very opportunistic miners were able to go in there, use stranded wind, to buy it out of bankruptcy, and they don't have to pay to transmit it. They can just mine it right there, right on site, which decreases, obviously, the expense, the infrastructure cost. And we're seeing that in all parts around the world. So people being very smart, very opportunistic to try and find this stranded energy. And I think that it can only be a good thing for the industry at large.
Yeah, definitely. Bjorn, what do you think?
So I think that Bitcoin mining evolves in certain cycles, right? And there was a certain cycle where sites were small, then they grew really big. And right now we're in that moment where you still grow really, really big sites. Like Texas has some 500 megawatt sites, almost gigawatt sites, right? And so this centralized kind of centralized mining, right? This massive mining. I think that works at energy prices that are a certain energy price, and it works at certain hash prices. So right now, kind of works, right? Not really. If you look at all the public companies, they just issued 300% of equity over the last, 12, 24 months. So you could argue if it really works. But it kind of is the thing that's happening right now. And I think that probably one thing that will come to end that in the US is the emergence of artificial intelligence and the demand that this will draw. And if you look into the marginal value add, so to say, by having artificial intelligence, which will be huge, and it probably will create an incredible amount of value overall, and it will probably demand an incredible amount of energy. So this will probably be, let's say, more valuable to use your energy for that. And it will be very important politically. And I think that will be a more important topic for the US than block space. So I think there's some kind of equivalent, right? Even if we assume that Bitcoin over the next 10, 20 years becomes really, really important on a nation state level, and countries will compete for block space, I think even then countries will have to make the, think what they want, how much. Do they want more AGI or do they want more block space, right? So I think there will be some kind of equilibrium, and I think that there's a good chance that artificial intelligence will start that, and I think it will start in the next years, probably 2-3 years to come. And then I think that there is a lot of probability for energy prices, the marginal cost of energy for Bitcoin mining to go further down. It has decreased, right? And in the past, you mined at your CPU at whatever price, didn't matter. Then at some point that was 15 cents, 10 cents. So it was still a kilowatt hour, right? So it was still quite expensive. Today we're talking about 4 cents, 3 cents, and you really want to have 2 cents in your opportunities, or you want to have free energy, right? So I think also cycle by cycle, this is evolving, and we're finding new ways, and the industry is maturing, finding new ways to integrate mining into other activities. Is it desalination of water, or is it biomass combined with some production process, or whatever it is, right? Or is it flare gas, right? To give you another great example of essentially free energy. And I think that probably more and more mining will move into these things because it makes a lot of sense for mining, and almost no other technology or industry can do that.
Go ahead, Q2.
Yeah, just to add to your original question, if I think centralization in North America is a problem, I think it is a risk. Actually, I think while I fully agree with whatever Ian said, that there was and there is a centralization on the pools, I think that risk is inherently much smaller because, first of all, you can switch the pool from 1 minute to the other, and you can spin up a new pool in a couple of days or months, I guess. So, you cannot really move miners easily. It's actually you rather go bankrupt probably because you can actually take all your miners and go to another country and start from scratch. So having so much Bitcoin mining concentrated in one place is actually a big risk. It's a very big risk, and I think I think 40% in the US now is a bigger risk than 7% in China 5 years ago, because just about where Bitcoin was at the time. Nobody really cared. Fewer people care. Still, nobody cares about Bitcoin, if we're honest. It was not as relevant. It is becoming more relevant strategically and geopolitically. And we all know that if the US decides that anybody who's in the US needs to be OFAC compliant, they're going to be OFAC compliant like that. There is not a single player that is going to risk getting sanctioned or shut down or bankrupt because they don't censor a transaction. And we know the U.S. jurisdiction, and they have jurisdiction over U.S., and they have jurisdiction over a bunch of other countries in the world. So I think it's extremely important that there is Bitcoin mining in geopolitically diverse areas. I'm very happy to see that there is more Bitcoin mining happening in Russia. There is more Bitcoin mining happening in China. There's still happening. That is happening in Africa, that other places coming up in South America. And I think it's essential. Again, you can't really fight the economics. So the big thing that speaks for the U.S. is that, as the colleagues were saying, you have just good prices. You have a free market. It's very simple. You get a contract at 3 cents. You have demand response that compensates for your downtimes. And it's very easy to actually make a contract and create a new site. Whereas in other countries, Latin America or Africa, it's a long process until you have actually access to power at interesting rates. So and that's why we are also heavily interested and invested in creating energy generation in other jurisdictions as well, to help keeping diversified. Obviously, we can't do it alone, and I think market forces are going to help in that sense. But yeah, I think it's something that we should keep an eye on at least.
On the previous panel, Fernando mentioned that one of the bottlenecks is on the actual hardware side. So how do you overcome the centralization that's with the mining hardware providers? He mentioned that there's only real 3 makers of hardware. And then if you go another level beyond that, at the foundry level, it's even more centralized. It's basically all TSMC, and now Taiwan is going to get tariffed. So how do you get past that? Or is it not even something you can get past?
Yeah, well, I think we're starting to see, some other hardware provider manufacturers out there, right? Some of the U.S., I know Marathon is just made a large investment. Bitmain, I think over the last year and a half, been flooding the market, secondary market with a lot of machines, right, to try to take out micro BT, right? So that kept basic prices down quite a bit. But I think they've gone through most of their secondary inventory, and I don't think their production facility is going to be able to keep up with the volumes that they're going to need to go further, right? So I think we're going to see a slowdown. It's going to be harder to get ASICs in the future, and to tap onto the energy side of it with AI. Now with Trump in order there, and he's got a $500+ billion investment to do AI. I think it's going to make it even harder to try to find energy. But a lot of the AI is going closer to the city limits because of latency. But you do have training. Training can go out a little further because it's not so dependent on the latency. It's going to be harder. I think we're coming into like a super cycle here. From a global perspective, we got issues in Taiwan, so the fabs are going to become an issue, right? And the fabs are going to all want to dump they're going to want to produce AI or GPUs, not ASICs, right? Because the profitability is going to be there. So it's going to be much harder to get ASICs. It's going to be much harder to try to find power and to produce the power. So I think we've seen an extreme exponential curve in the difficulty, but I think that's going to start flattening out a little bit. And I think Bitcoin is going to keep going up because you start seeing large institutions starting to adopt it, right? Just Bank of America said they're going to keep that in treasury now, right? So we're starting to see these large institutions. Everybody knows BlackRock, the iShares, they've done. So we're starting to get a large institution, jumping into putting Bitcoin in their reserves, and I think that's going to drive the price way up. But I don't think difficulty is going to follow it like it has been thus far. So we're seeing this cycle we're in as being a super cycle.
Guy, what do you think? How do we get past this centralization? Does Tether have plans to build a foundry?
Yeah, sure. Why not? Yeah, well, it's interesting. The Bitcoin mining industry, mining producing industry, has always been a very particular one. Anybody who's in the space for a while knows that every couple of years a new company comes up and they make a new chip and then they go bankrupt.
I was going to say to James, it's like a graveyard of broken dreams.
Exactly. And now, obviously, Tether, we always look at everything, and we have an open eye and look at opportunities. But now we have, how many new players do we have coming into the market? We have Mara, we have Auradine, which is for the Mara. Then we have Block. We have a couple of US ones, and I think they're probably going to have a market, especially when tariffs come up. Bitdeer, I guess, which is partially American in a way. There might be an opportunity if they put tariffs on anything that touches China in a way or the other. But besides that, let's see how it goes. There is not a big innovation happening there. Everybody's using TSMC. Like everybody we talk to, we use TSMC, right? All right. And so it's like, it's more of the same. Obviously, it's good if there is competition, but I'm not sure, like in 3 years or 4 years' time, how different the market is going to be compared to now. And I think it's a problem. Especially Bitmain has been very aggressive always. So not sure if there's a solution to that. And as you said, you go back to the foundry, there's basically TSMC and Samsung, that's it. And until the other foundries come online that are supposed to be built in Europe and US, I guess it's going to take a while, and then they have other priorities. So at the same time, I'm not sure how much of a real threat or problem it has been for the Bitcoin mining industry because there still is the competition. The prices have gone down. Like, it's not a monopoly where somebody has high prices and you have to pay a lot. The prices usually come with a cycle. Like, when there's a hype, everybody wants to pay a lot for it, which actually we didn't even see this time. Like, I remember like 3 years ago, we were paying like $100 per terahash, which is a number that you couldn't even think about anymore, which is absolutely crazy. And we did have a small bull run of 6 months where the revenue was very high, but the miner prices didn't go up, also because there was a lot of supply.
Well, I think the miner price is kind of tracked to hash price. You go back 3-4 years ago, hash price didn't really exist, right? But if you go back to the height of like 2021, if it did exist, it would be upwards of 400, bringing up for $400 per petahash per day. That's why. So the profitability was huge back then, and Bitmain and MicroBT were able to get away with charging so much money for the machines, even though the Bitcoin price, the price is up there, but the profitability is nowhere near what it was back in 2021. So that's what's keeping the ASIC prices down. I do see prices going up a lot quicker than difficulty in the near future. So as we see that spread between the two and hash price goes back up, I think we're going to see the ASIC prices go along with it.
I think this is all very, very important. And I think what happened in the past, right? If you go back in 2015, 14, when ASICs came out and really this started, is that they produced on very old technology platforms. So they could go jump every year to a better technology platform because volume would go up, and they would access new technology until 2019, 18. Really, they were at the state of the art in terms of semiconductors. So this time was very difficult to mine, actually, right? Profitability was of course much higher, but also your Bitcoin miners were the absolute shitcoins because they would go to zero over a year, right? So then it kind of calmed down quite a bit. But then we had this insane profitability, right? So now everyone rushed into the market, became very crazy by having these insane prices. And we had the pandemic, we had the semiconductor shortage and all of these things that contributed in a way to that, right? And I think in a way, like kind of like following up on the super cycle, it's the goal. It might now be the golden time for mining because there's a lot of factors that
I love miners. They're always so optimistic. They're the best.
That's why we're all here, no? If you would just look at the facts, we would turn around and go. No, but I think there is a good chance for that, seriously, because the evolvement, the advancements in semiconductors is slowing down dramatically. I think we're currently, talking about 4 nanometers, 3 nanometers, 2 nanometers, and we're actually not even making things small anymore. We're just starting to build upwards, and that has limits. And so you can argue where these are, but we're going to run into some serious issues. And then the only thing you can do is you can grow in size, but not in efficiency. So you kind of fundamentally change the dynamics that we're seeing today in semiconductors. And I think this is in the next 2, 3, 4, 5 years, right? It's not far away. And so there is a good chance that the progress kind of will slow down. Bitcoin adoption will rise, right? Where we've seen basically 96% of Bitcoins being printed so far, miners being forced sellers. This is gone, right? In all the last 3 cycles, you saw massive amounts of Bitcoin being sold by miners. There's no more of that, right? If you look at like exchange liquidity, it's trending down since I think March.
It's a historic low now.
Yeah, it's in a historic low, and it looks like this, right? It looks like this, and you're like, okay, where is this going? And so I think March 14 or 13, March 13, 2020 was the peak, and since then it turned direction. And so there is a lot of very interesting elements to this that it actually might be that in the future hash price might increase. We've seen peak pain, so to say, now at around $39 a petahash a day. That was very, very tough for all industry. No one made money. We were far basically out of the money with all these machines. Now we came back where it's almost 60. And now we start to be in the money again, right? And that's also why these computers have not really went up, because just everyone in the industry sustained so much pain. And now we're really reaching this profitability again. So as this is going, it's still a cycle, right? but we're very optimistic.
All right, I need to tie this back to tokenization. We've just done like 20, 30 minutes of Bitcoin mining, and everyone's wondering, what does this have to do with Bitfinex Securities? Okay, one of the applications of tokenization is hash rate contracts. So Bjorn, can you tell us what hash rate contracts are, who buys them, and what are they used for?
Yeah.
Quickly.
It's a forward deliverable of hash rate, right? Hash rate, a production unit of Bitcoin. Just like any commodity really has futures, deliverable futures for centuries. Bitcoin now has those as well. The buyers are surprisingly, of course, hedge funds, any TradFi industry that wants exposure to mining but doesn't want to own or deal with the physical aspect of it. And then a big customer of it as well is publicly listed Bitcoin miners.
We're hedging.
For showing that they reach 50 exahash on the 31st of December, right? So public companies make a multiple on hash rate, and it's very difficult to fulfill your promises. So you can just go and buy hash rate with these contracts and pump your hash rate, which the public markets, especially NASDAQ, you get a significant multiple on that today. So that is a main buyer of these contracts.
That's interesting. So we've had a lot of people look at hash rate contracts, tokenized hash rate contracts. I think the flagship product within hash rate contracts, and I think also within tokenized hash rate contracts, I think also within security tokens, has been the Blockstream mining node. A really successful product, raised almost $50 million, went through its whole life cycle, 36 months, did the biggest RWA payout ever, returning 1,200 Bitcoin to investors. Properly tokenized, meaning you could self-custody it, you could trade it peer-to-peer within a whitelisted ecosystem. James, you guys were the issuer of BMN1. It's matured, it's been put to bed. Now you're doing BMN2. Can you talk about what the BMN1 was, what its performance was like, and how the BMN2 is shaping up?
Sure, absolutely. So the BMN1 basically was a forward hash rate contract for 3 years, a 2 petahash. The return on that was 32% above Bitcoin return. So I think it's the best real world asset return out there. Pretty good. People love the return on Bitcoin. So you bought this, you would have made 32% more. So because of the success of that, we sold 50 million of that, and we had about 20 million on the secondary market, for liquidity. That went as well. So very successful. So we launched BMN2, and the BMN2 is a 4-year contract, and we dropped it down to 1 petahash to kind of match what the market has been doing. Like if you go to Luxor, and the market's kind of measuring everything on a one petahash range. So this is a 4-year contract for, it's a forward fixed rate contract with 4 years. You don't see anything else like it. When you buy hash rate contracts, usually you're buying it for, 6 month max. I think you're starting to see 12 months. You don't see 4 years out there. So it's, and we priced it with the expectation that it's going to beat Bitcoin again. When we came down, our initial price for the Series 1 was 21.23. 21.23 off the around the 40 was the hash price at the time. So $23 per day per petahash. Now that's you have to be able to produce really cheap to be able to offer that. But the reason we can do it is because we're bringing capital forward, and we're able to leverage the capital, create a yield on. So even if we do it at our cost, we're making money, right? So it's a win-win for everybody. So 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 the differential between 1 and 2 is it was 3 years, 2 petahash for a 32% return. Now we're at 4 years, 1 petahash, but a completely different market. When BMN1 was launched back in spring of 2021, the hash rate was probably, I think, was around like 350, the hash price. And now where BMN2 is launched, we're launching it somewhere around the $40 mark, so completely different range.
So how would you kind of put the fundamental concept of the BMN1, and I think the BMN2 is mostly as a US dollar yield product built on Bitcoin. So you invest with US dollars, you get most of the upside of Bitcoin, but you get like kind of less of the downside swing in a correction on the cyclical corrections.
Well, it's less volatile than just buying Bitcoin, right? So you're not going to see, if they get a big price drop in Bitcoin, you're not going to see that much. You're still going to, because you're buying hash rate, you're still going to produce as much Bitcoin. You don't see as much of the drop.
And there's also kind of a DCA kind of concept too, right? Because you're mining over time and you're kind of producing Bitcoin over time as well.
Yeah. So it's been a very successful product. Now we raised 190 million this year in about 6 months, and we're looking to extend that up to about 500 million
That's amazing. I mean, just to put in concept, I think for security token markets, that's you see a lot of smoke and mirrors, but that's a very big real number. That's a massive accomplishment. Ian, have you guys looked at tokenization around what you're doing with Ocean? Is there any applications there for you?
So for us, tokenization and futures contracts, for us, one of the biggest challenges is transparency, right? Blockstream might be the exception. And so, there's a lot of products out there that are being filtered through an FPPS pool, a custodial pool, and they're pegging it to a hash price, but that's net of their fees. That's net of their short-term financing money. And so we don't really think that's accurate. And so one of the things that we hope to do with our full transparency and our on-chain model is to be able to bring better signals and better, so that you can actually have a better, more accurate prediction of how much it actually costs to mine Bitcoin. And so that for us, that's not a token. That's just better information and better signaling. Now, the reality is most tokens, if you look historically, globally, most tokens are scams. And so, El Salvador is really the exception to give clear regulatory guidance, a good legal framework, Bitfinex being able to vet and do things. So there's things that can be done here, which is why we have an office in El Salvador, that brings stability and predictability and the things that you want, just to avoid kind of the I need to take a shower scamminess of so many other things out there, right?
ICO shenanigans.
So we take a bath in the ocean, nice clean view. So our focus is really on the data and the information in order to try and allow others to be able to see that and build more accurate markets. And, I think it was understated here. Everyone's so optimistic, but the Bitcoin mining business is one of the absolute most difficult in the world. But I continue to get impressed by the innovation and the adaptability as one. I suspect one or more large public miners in the United States will go bankrupt soon. And it's because they keep making these bold predictions and then they can't execute. So that means there will be more machines available to buy out of bankruptcy. So I mean, the industry does a really good job of redeploying assets, and I think, but it is such a difficult market that I think more sophisticated financial products built on top of it, if it's got good data and accuracy, will be good for the industry. But it will take some time, and I think Blockstream's the exception. But most, like I said, they give me that scammy feel, and so you have to be very careful as you move into that space.
Well, I think, as the industry is maturing and even the late people out there are becoming more educated on Bitcoin and trusting in it more, right? Because a lot of folks are making money. Creating these financial products is an on-ramp for them that into mining that would be cost prohibitive otherwise. I can also have another product that we're looking to release is it's the hash rate high yield product, right? And the differential between the high yield product and the BMN is the BMN pays at the end of the term. The hash rate high yield product will pay out monthly. Now, to your point, where a lot of the public miners, all they really care about is recording how much hash rate they have on the management, how much extra hash rate by management, and how much Bitcoin they're pulling on the balance sheet. A hash rate high yield product, they can put it on the books and then get the BTC at the end of the month, right? And we can produce it much cheaper than the public market can because they got a lot of overhead. We're a very streamlined operation, and we're very focused on that specific product. We're not trying to do 1,000 other things. So it would be very attractive to a Riot or a Mara, to buy the hash rate high yield product from us, and then put it on the web page. Hey, now we got that 50 exahash now, and we're accumulating BTC. And with that, we're also looking at tokenize that as well when we get to it, just like we did with the BMN. And hopefully Bitfinex can help us with that one too.
Yeah, definitely. From an investor perspective, I think that's also an advantage is that it's a pure Bitcoin play. There's no AI or Ethereum mining or anything else attached to it. It's a pure Bitcoin play and kind of uniquely so.
Yeah, I mean the challenge of and not putting more of it out is we have to have the hash rate backed up. We're actually creating and mining the hash rate. So it's not we're not going through pools or any of that stuff. We're actually creating the hash rate. So we have to add capacity before we can add, more product out there.
But last two questions. Bjorn, I know that you've looked at tokenized hash rate contracts as well. What do you think are the advantages for issuers and investors and the challenges?
So maybe first, it's very crazy that Bitcoin is this major new money, digital, all digital, and now we're talking about basically building derivatives on top of it, right? Or at least futures and forwards on top of it. And so one thing we've been working a lot on is to see what we can do with the UTXOs, so with Bitcoin script essentially, in order to link it together in a more transparent way, to reduce counterparty risk to the minimum and to increase transparency to the maximum. Because this is kind of like the prime example of the future of money. And it's the prime example of the future of tokens or however you want to call it, securities. So we've done a lot of work around that. And I think that the benefit of it, where we really need to get to with this, is as a miner, what we want is adoption, right? We want a large adoption, these tokens to be traded. We need a liquid market in that. I think that was a challenge in the past, very historically, that you could buy these contracts at issuance, but then there was very little liquidity secondary. And in the best possible case, right, for a miner as well, we would be able to access this market at any given moment, go in and out, and even eventually see a multiple on these contracts, right? Because there can be a lot of other derivatives built on top of that in this new financial system. And I think that is something where it is very natural and very beautiful in a way that these tokens are, or that these contracts are not just analog contracts in a platform with an order book, but actually fully digital, transparent, and with a minimum possible counterparty risk.
Great. Okay, final question for everyone. What are you looking forward to most in 2025 in terms of Bitcoin mining, new tokenized products? James, you want to start?
Thus far with BMN1 and BMN2, we've been limited to the accredited buyers, right? So one of the reasons we're working with Bitfinex down here in El Salvador is because we really like to capture the retail market as well, right? And there's a huge market out there that we haven't been able to tap into until recently.
I would just say, our primary focus is building the pool, right, and getting more miners around the world to use us and use us for those benefits that we talked about of decentralization. But a little bit more exotically here in El Salvador, we've got a pilot program now focused on a liquidity market. It's premature, but we expect to have that on the miner side probably at the end of Q1 and the liquidity partner side at the end of Q2. That I think is interesting because instead of having to rely on a foundry or a Luxor or an AMP pool to provide that short-term liquidity, now we can open that up to market forces and have outside liquidity providers get access to the space and do it in a transparent way and allow market forces to move that. And I think that's something that's been missing a little bit. And so we're optimistic about that as well.
Give?
I think what is, at least from our perspective, very interesting about Bitcoin mining, which we're seeing becoming more concrete in 2025, or hope to have some more progress on it, is partnerships with energy companies. Because up until now, basically, a Bitcoin miner was always a consumer, and the energy company was like, they had no idea what's happening. And they're like, okay, you want the power, or I give you at that price. And now the serious players, like every big energy company, has started already since a while looking into Bitcoin mining. Most of the big ones we're in touch with, they're doing one way or the other Bitcoin mining, very small scale, 1 megawatt, 2 megawatts, 5 megawatts. And this helps a lot in forging partnerships where you're not necessarily a pure consumer, but you forge a partnership. They provide the power, you provide something else, and then you split the profits. And I think that's very interesting because it will align the incentives. And then you can have very interesting partnerships where you say you have a spot market that is volatile and they provide the energy. And then if the energy price goes up, they want to sell to the market because it's more profitable. But then you split the profits from that one as well. So I think that's very interesting and can create very strong kind of partnerships between miners and energy companies.
Great. Bjorn, final thoughts.
Well, for us, our mission is to transform energy into human potential, and that means that we're building out our platform to be used by more communities. We've delivered on that in Paraguay, and we continuously are now expanding in 2025 the academy a lot. So thanks to the mining and thanks to running the data centers, this year we're going to run more than 500 people through a 8-month program, and we're projecting to get 280 people into jobs 3xing their salary, which is very important, like going from $200-300 a month to almost $1,000 on average. And so this is a concept that we want to take into Brazil. We want to take into some other countries that we're currently working with, and then very much +1 on the collaboration with energy producers. In all situations that I can currently think of where we're seriously advancing, we're talking about aligning interests and having a deep integration with the energy producers. And I think that is fundamental for this year going forward.
Great. Thank you very much. I appreciate the time from the panelists today. Maybe to wrap things up quickly, we'll just do, 2 or 3 questions, maybe 2 questions, and then we'll wrap things up and finish up with drinks in the foyer.
Can you speak a little bit more about extending the BMEN2 contract? I mean, the ones that you launched kind of closed very quickly, so you kind of said that probably you'll up it from 190 to 500 mil.
Yeah, I'm not hearing that. I know I heard the BMN2, but
Do you mean extending it from?
extend. Okay, yeah. So we do it through series, right? We're going through Stoker and doing series. We're on series 8 right now. But what I need to do is I need to bring on more capacity before I can do another series, right? So we're at about a 3 exahash obligation thus far. So I have to have 3 plus exahash online, right, just to cover that. So we're in the works right now. We're probably going to bring on another 2 to 3 exahash over the next 6 months. We're trying hard to do. I got a lot of miners sitting in closets, ready to go. I just looking for the capacity, right? And and that's a challenge. And we can't build it quick enough. So as I bring on additional capacity, then we'll open up a new series. Right, and then we'll do it from there. But each of the series will basically go off of the current the spot hash price. So we generally discount around 45 to 50% off the current spot price, the hash current spot price. So what you do is we started mining on September 5th, so you got to buy the Bitcoin up to whenever the new series is, right? So that's what makes it all fungible, all the series fungible amongst each other. And then you pay the hash price from that term on to the remainder of the node, right?
Thank you.
Great. Any more questions? Last one.